The United States of America is the wealthiest empire in the history of the world. It holds the global reserve currency. It commands the most powerful military. Its financial markets are the envy of the planet. And it is broke, not just in debt, not just running a deficit, but mathematically, structurally, and irreversibly insolvent. The national debt has crossed $37 trillion. That is a number so large it loses meaning. But let me put it in perspective for you. The United States government now spends more money paying interest on its old debt than it spends on its entire national defense. It spends more on interest than it does on healthcare for its veterans. For decades, we were told this didn't matter. We were told that as long as the world trusted the dollar, we could borrow forever. But that trust is breaking. China is selling, Japan is selling, and the BRICS nations are hoarding gold at a pace not seen since the collapse of the London gold pool. So what does an empire do when the credit card is maxed out and the creditors stop picking up the phone? It doesn't declare bankruptcy. It changes the rules. Welcome to the Financial Coin Historian. Today we are investigating the $37 trillion currency reset. This is not a theory about the future. It is a forensic analysis of what is happening right now. We are going to decode the warnings coming from the highest levels of global geopolitics, including the shocking claims from the Kremlin that the US is preparing to upload its debt into a crypto cloud. We will explain how the Genius Act and the rise of stablecoins are being used to artificially prop up the Treasury market. And we will show you why the sterilized reserves, trillions of dollars of dead money sitting at the Fed, are about to be unleashed, triggering a wave of devaluation that will steal the wealth of anyone holding paper money. The reset has started. The old dollar is dying. The new system is being born, and the cost of admission is your purchasing power. To understand the solution, you must first understand the catastrophe. The US financial system is currently trapped in what the European Central Bank calls a debt doom loop. Here is the mechanism. The government spends more than it taxes. To fill the gap, it issues debt, treasury bonds. But because the debt is so high, $37 trillion, investors get nervous. They demand a higher interest rate to lend money. Higher interest rates mean the government has to spend even more money just to pay the interest. So they have to borrow more, which makes investors more nervous, which drives rates higher. It is a death spiral. The $1.2 trillion interest bill. In just 5 years, the annual cost to service the U.S. debt has jumped from $500 billion to over $1.2 trillion. This is nearly 1/5 of all federal tax revenue. Imagine if 20% of your paycheck disappeared instantly to pay credit card interest before you paid rent, bought food, or put gas in your car. That is the state of the US Treasury. This creates a phenomenon known as fiscal dominance. This means the Federal Reserve is no longer independent. It cannot raise interest rates to fight inflation, because if rates go too high, the government goes bankrupt. The Fed is now a hostage to the Treasury, the loss of the foreign buyer. For 50 years, the United States had a magic trick. It exported its inflation. When the US printed money, countries like China, Japan, and Saudi Arabia sucked it up and used it to buy US Treasury bonds. They funded American excess. That era is over. China and Japan, once the voracious buyers of US debt, have turned into net sellers. The dollar's share of global reserves has hit a 30-year low. The risk premium on US debt, the extra interest investors demand for the risk of holding dollars, is rising. If it returns to historical averages, interest rates would spike to 6% or 7%, crashing the US economy instantly. So the government needs a new buyer, a buyer with infinite appetite, a buyer that doesn't care about politics. And they found one. At a recent economic forum, Anton Kobyakov, a senior advisor to Vladimir Putin, dropped a bombshell that went largely ignored by Western media. He claimed that the United States is preparing to use cryptocurrency and stablecoins to secretly devalue its $37 trillion debt. His exact words were that America's ultimate goal is to push the world into a big crypto cloud. What does this mean? Is it propaganda, or is it a leak of the strategy? If we look at the actions of the US Treasury and the banking sector, Kobyakov's warning aligns disturbingly well with reality. The plan isn't to pay off the debt. The plan is to tokenize it. The mechanism of the reset. The theory posits that the US will move its debt obligations onto a digital ledger. By integrating US Treasuries into the blockchain ecosystem, they create a new source of demand. If the entire crypto market, Bitcoin, Ethereum, Solana, stablecoins, moves to a valuation of $10 trillion or $20 trillion, and if that ecosystem is forced to hold US Treasuries as collateral, the US government has found its new China. This is not science fiction. It is happening. BlackRock, the world's largest asset manager, has launched tokenized treasury funds. They are actively building the plumbing to allow US government debt to be used as collateral in DeFi, decentralized finance. They are turning the crypto cloud into the dumping ground for US sovereign debt. The most critical piece of this digital reset is the stablecoin. Stablecoins like USDT, Tether, and USDC, Circle, are digital tokens pegged to the dollar. To maintain that peg, the companies behind them must hold real assets, specifically US Treasury bills. This makes stablecoin issuers essentially digital central banks. The numbers don't lie. Tether and Circle are already among the world's largest holders of US debt. They hold more US Treasuries than the nations of Norway, Brazil, or Germany. They are becoming the buyer of last resort. The US government understands this. This is why we are seeing a push for legislation like the Genius Act, regulatory frameworks designed to legitimize and expand the stablecoin market. Think about the incentives. If the stablecoin market grows from $200 billion to $2 trillion, as projected by the US Treasury, that is $2 trillion of new demand for US debt. That completely offsets the selling from China and Japan. By encouraging the world to use digital dollars, stablecoins, the US government effectively forces the crypto market to fund its deficit. It is the petrodollar system reborn as the crypto dollar system. But where does the money come from to buy these coins? This brings us to the most technical, yet most explosive part of the reset: sterilized reserves. Since the 2008 crisis and the 2020 pandemic stimulus, the Federal Reserve has printed trillions of dollars. But not all of that money went into the economy. Much of it was sterilized, parked at the Fed by commercial banks in something called the reverse repo facility, or held as excess reserves. This is roughly $3.2 trillion of dead money. It exists, but it isn't circulating. It isn't causing inflation yet. The floodgates open. The reset involves activating this money. Under new banking regulations and the push for digital assets, banks can be incentivized to move this $3.2 trillion out of the Fed's freezer and into the market, specifically into tokenized bonds and stablecoins. When this money enters the system, it acts like a massive stimulus package without Congress ever voting on a bill. It provides liquidity to the bond market, keeping interest rates falsely low. But it also has a consequence: devaluation. You cannot inject $3 trillion into the economy without devaluing the currency already in circulation. This is the hidden default. The government doesn't default on its debt by refusing to pay. It defaults by paying you back in dollars that are worth 40% less. The rest of the world sees this coming. They know the US is planning to inflate away its debt. They know the crypto cloud strategy is designed to suck global capital into the US Treasury market, and they are opting out. The golden hedge. This is why we are witnessing a historic run on gold. For 3 consecutive years, global central banks have bought over 1,000 tons of gold annually. This is the highest rate of accumulation since 1967, the year before the first gold standard collapse. Who is buying? China, Turkey, Poland, India, Singapore. These nations are not buying gold for jewelry. They are buying it as a hard asset hedge against the coming devaluation of the dollar. They are preparing for a world where US Treasuries are no longer the risk-free asset, but a certificate of confiscation. Project Mandala and the BIS. Even the Bank for International Settlements, BIS, the central bank of central banks, is preparing. They are launching Project Mandala, a system to automate compliance and embed regulation into digital transaction flows. This is the infrastructure for a post-dollar world. A world where cross-border trade doesn't have to go through New York. A world where the BRICS nations can trade in digital currencies backed by gold, bypassing the US debt trap entirely. So, what does this $37 trillion reset mean for you? It means we are entering a period of high, sustained inflation. The government has no other choice. They cannot pay the debt. They cannot default. So they must inflate. This triggers the Cantillon effect. The new money created by this reset, the digital dollars, the activated reserves, flows first to the insiders, the banks, the tech companies, the government contractors, and the holders of assets. They get the money at today's value. By the time that money trickles down to your wages, prices have risen. The gas, the groceries, the rent, they all go up. You're paying the tax for the reset, the soft default. This is how the $37 trillion disappears. It doesn't go to zero. It stays at $37 trillion, but $37 trillion buys what $15 trillion used to buy. Your savings are the fuel for the fire that burns away the national debt. The warning from the Kremlin, the moves by the Fed, the buying of gold by central banks, they all point to the same conclusion. The current financial cycle is ending. The US is attempting a high-wire act, pivoting from a debt-based system to a digital asset-based system to keep the empire running for another generation. They are building a crypto cloud to absorb the debt that the world no longer wants. For the unaware, this will look like chaos. It will look like inflation, volatility, and uncertainty. For the prepared, it is a signal. The smart money is leaving the risk-free assets of the old world, bonds, cash, and moving into the hard assets of the new world, gold, Bitcoin, land, commodities. The $37 trillion reset has started. The system is changing. The only question left is, will you change with it? This is the Financial Coin Historian. History has shown us the pattern. Now it is up to you to survive the transition.